Our next guest is making the case for a financial services name that he's recently added to his watch list. To explain, let's bring in Malcolm Ethridge of CIC Wealth. He's the firm's executive vice president and financial advisor. Malcolm, what's your number one reason why you like Visa?
Yeah, well, simply put, this name is the very definition of quality at a reasonable price, right? There's some companies that have been hit too hard during the broader market sell-off this year, and I see Visa as one of them.
I mean, is it the cross-border business that attracts you? Is it the return of business travel? I mean, what are some of the other sort of catalysts here for the stock right now?
Yeah, I mean, I have a working thesis that there are some companies that have sold off, quality companies with solid financials that have sold off so much that it's giving us a second chance to buy it, but at pre-pandemic levels with all of the technological improvements and any other upgrades it's made to its payments network in the last 2+ years, that is Visa. And, if we just look at the third quarter alone, they transacted nearly $3 trillion with a capital T worth of payments from you and I, right? That's their bread and butter. They get paid every time you and I make a transaction and swipe our card. Again, it's a very simple business model. And that free cash flow that they reported last earnings report, something like $18 billion worth, they may decide to use that on buybacks sometime soon. They don't carry much debt, if any at all, and its earnings continue to grow double digits. And so it just looks to me like a great company, solid financials, that has just gotten beat up and thrown out with the rest of the bathwater, so to speak, simply because the markets have been selling off so indiscriminately.
It's Karen. Clearly a great franchise for sure. But do you think the upside comes from an earnings growth story or a multiple expansion, or maybe both?
I think more the earnings growth story. I think, as we look at consumer spending and we look at the fact that, folks are spending down their savings a little bit, folks are talking about pulling back, and we heard Walmart talking about folks trading down and those sort of things. But what that means is they're still swiping their cards one way or another, right? Regardless of whether they're doing it through their bank accounts or doing it on credit, Visa is getting paid every single time one of those swipes happen. And travel hasn't gone anywhere. If anything, we've seen it go up. Spending around the holiday season will probably hold pretty steady. At least that's the expectation we're told from big box retailers. And so it just seems to me that regardless of what direction and how much these companies themselves actually earn, Visa is perfectly positioned right there in the middle of it to earn every single time you and I decide we're going to make a transaction.
Malcolm, when you look at the economy, the obvious question is if people are going to be spending less and we're heading into either a mild recession or a deeper recession, is this the place, A, that you really want to be in? And then the flip side of the question is when you look at the fintech stocks that have been beaten up so bad, what would you expect those to rally and pop to more of a degree than what I see to be a rolling over in the chart of a MasterCard and a Visa?
Well, I don't know how much I buy that story about us slowing spending because of the impending recession, right? I think if we just look at the fact that somebody like a Home Depot, for example, their total sales volume was down 4%, but the average receipt was up something like 9%, right? We know Visa's take is basically based on the size of that check, that swipe. And so if we just look at that and the fact that Home Depot is a company that should have been negatively impacted by the sell-off that's happening in the housing market, yet they're still talking about rising check amounts, even though traffic into the stores and sales volume is down, right? So I think that's evidence that those card swipes are still happening, whether it makes sense to us logically or not, given everything we know about an impending recession or not. But then to your question about fintech, Visa's also recently filed trademarks related to a crypto wallet, which, given what we've been talking about with FTX and BlockFi, may mean that they end up longer term with a whole new set of customers that come in looking for a safer place to hold that crypto. And maybe that's a longer term case for why you might want to hang on to Visa. So I think either way, they're perfectly positioned to be right there in the middle of all of the transaction activity that's happening without having to choose which one of the retailers is going to be the winner.